Hello, and welcome to Kevin Mortgage. Ask the Mortgage Guys Live. I'm your host, Sarah Patnote, and we're so glad you are joining us for our live program. We have our mortgage guides, Kevin and Randy Erickson, in the house. Hey, guys.
Hello, everyone.
Hello. Well, our topic today is mortgage considerations before and after retirement. So we want you to get your questions ready. We'll have a Q&A segment where you can submit your questions in the comments. Just so that you know, we're very excited about this. We are simultaneously broadcasting on Facebook and YouTube, coming to you live from Minnesota and Florida. Woo! So we're covering the nation here today. So we're cold up here and warm down there with Randy here, and so we want to know you're here. Send us some love, drop us a comment. We want to know where you're tuning in from, and we'll watch the comments here. We'll be ready for that Q&A segment, and let's get started. So, hello, Kevin, and hello, Randy. Some people who are tuning in tonight might not know who you guys are. So let's get this kicked off and have you guys introduce yourself. I'm going to pop backstage and I'll be back for Q&A. How does that sound?
Sounds great. Thanks, Sarah.
All right, I'll go ahead and let you guys get started here. So here we go. Have a great session.
Hello, everyone. I'm Kevin Erickson. I'm branch manager with Kevnick Mortgage, part of Axia Home Loans. We've about 16 years in the business and absolutely love having impact within people's lives. And today's a fun one for me as it's helping people transition from their work days into the retirement days. So something that's always been near and dear to what we do here at Kevnick Mortgage.
And hello, everyone. This is Randy Erickson. I head up the Kevnick Mortgage branch here in sunny, well, it's usually sunny Florida, but it's nighttime. This is a special one for me as well because this is the first one I get to do with my older brother. So the first Ask the Mortgage Guys Live. So it's that's special for me, and I certainly echo everything that Kevin had mentioned as well regarding the importance of retirement and really the role that we've been playing in the lives of many of our clients related to retirement. It is interesting. So why don't we just jump right into the topic? In many aspects, retirement today or upcoming retirement is looking quite different than what it may have looked like many years ago or in the past. So for many, that big change has been the ability to work remotely. So there's a number of individuals that we've worked with or that we're working with that have taken the opportunity to work remotely and move into their more or less retirement home, retirement community, thereby accelerating their retirement plans, which has been amazing. For those in retirement, we're still seeing that continued focus on cash flow, right sizing, asset preservation, et cetera. But regardless of where you're at on the retirement spectrum, it's important that you work with professionals to develop the strategy and the related action plans to get you where you ultimately want to be in retirement. Kevin?
Yeah, and a lot of it comes down to being able to, with COVID, people have had the opportunity to work from home, where before they had to go into the office 5 days a week. So a lot of the things that we start talking with our current clients, past clients, the people that are connected with us, is there's some key questions. Really, what is your goal? What is it you're looking to accomplish, and what's your why? A lot of things that we start seeing is, is it accelerating retirement based on your ability to work remote? Being able to take advantage of working from home, going and getting the use and enjoyment out of a current property where before maybe you had to stay within 3 miles of your property. Now you can actually live 1,200 miles away and still do a very effective job with what you need to do from a work standpoint. Is it executing to retirement plan? When you really don't have an income stream coming in right now, you might be living off of assets, something like that. So, a lot of strategies that go in around that. Is it right sizing your home prior to or during retirement? Is it maintaining 2 properties for a short period of time, while you make a transition? Are you currently retired and you have some key life changes that have caused you to focus on preservation of assets? Is there something that happened that, maybe you're taking care of a loved one, maybe you had somebody that's passed away, something along those lines that's maybe changed the course of your retirement, and you maybe need to improve some cash flow or something along those lines. Are you nearing retirement with the plans to right size prior to actual retirement? And so there's a lot of strategies that go in there, and it really starts just with, with asking the questions and, what is it that you want to accomplish and how can we help you to meet those goals? How do we help you strategize to meet your goals? Can we assist, in navigating how to achieve your goals, and what might that look like? So we've got a couple of case studies, couple of examples of real life situations where we've helped people through it. They're definitely, bits and pieces that can be put onto other scenarios and stuff like that. But each of these plans are really personalized to the individual, that and what your goals are at that point.
Yeah, and Kevin, it's really amazing to that last point. There's a lot of parallels in the situations where we're helping a client or clients, with their pre-retirement planning or their retirement planning. But each one is very, very unique. In this first example, this was an incredible experience for me. This was after I just had started into the mortgage industry. Kevin, you had been working with with a client for about a year and a half, maybe even a little bit longer than that. About specifically timing around them moving from Minnesota to Florida. So in this situation, they were working about a 4 to 5 year plan. Their ultimate plan was to purchase down in Florida and then subsequently sell their current home up in Minnesota. One of the things that we saw with COVID was a mass movement to being able to work remote. This accelerated their plan, basically took about 3 years off of their plan. They were able to actually purchase their home in Florida and sell in Minnesota. But what's really most important, what we want to highlight here are the steps, is the process that we work through with them. We would hear from them, questions early on about, is this really possible? Can we qualify for both homes at one time? Because again, they didn't want to sell in Minnesota without having that property down in Florida. And then just as importantly, if we can't qualify for both, what does that look like? What does that limit us to? What's the loan amount? What's the payment? What's the purchase price, the down payment that we need to put, that we need to be putting down, so we can prepare for that. So through the education and the planning process, the clients were very, very comfortable. Again, through all the conversations, that they were ready to pull the trigger 3 years or so earlier than what they had planned to do. There was some anxiety, but again, we got them very, very comfortable through that education process. We provided them a number of options. They were able to evaluate their options. And then through the entire process, we were answering questions for them like, okay, so when we do get the accepted purchase agreement, what do we do when we sell our home? We're going to have this lump sum of money. We give them options for that. So really talking about options, giving them options and letting them make the best decision, or the decisions that they felt were in their best interest. And it was amazing. Once they got we sent them the pre-approval letters. Once they got that accepted purchase agreement, it just flowed just very, very seamlessly to the point where they were able to close on their home. Then subsequent to that, they actually closed on the sale of their home in Minnesota, and we had talked to them about recasting, or putting at least a large portion of that money from the sale of their home in Minnesota into the new home that they purchased in Florida to help drive that payment down. So from start to finish, it was, I mean, again, for me, being new into the industry, being able to see somebody fulfill, I mean, truly fulfill what's been a dream of theirs for years, and to be able to see them fulfill it, but also at the same time fulfill it 3 years early was absolutely amazing.
Yeah, and just to piggyback on that a little bit, these individuals were actually past clients of ours. We had helped them through a refinance. They had then met each other, wound up getting married. They wound up selling a property. We kind of helped realign some things based on the equity that they had positioned there. They had worked with their financial advisor to put together the strategy from that side of from that end of it. The recasting was actually part of the education process up front as well. So, hey, what does this mortgage look like if we get $75,000 additional that we can apply? What if we only want to put a portion of that? But they really went back and ultimately finalized the plan between themselves and their financial advisor. But we were just there to really help provide those options and making sure that at the end of the day, when they were ready to go, we could move forward. On our end with little to no extra anxiety coming from the home loan process side, if that makes sense.
Yeah, it definitely does. Yeah, absolutely. Well, and speaking of anxiety, I want to go into the next example, because it's again, there's a lot of parallels here. So this next example is an example of an individual that again was looking to relocate out of Minnesota. And again, for those of you that haven't been in a Minnesota winter, maybe you live in Florida, wherever you live, you'll understand if you make it through a Minnesota winter. But in this situation, this individual is looking to actually join some friends down in the southern part of Florida. And the really interesting thing with this one is they were told no multiple times by different banks that basically what this individual was looking to try to accomplish wasn't possible. That there was no income, there was just no way that this could be done. So this individual was referred over to us, by a realtor partner, and we took a very different approach. We never told the individual no. We knew quite a bit about this individual, but one of the main things that we had to work through initially was, rightfully so, this individual is coming to us very skeptical that we can actually do what we say that we're going to help him do. So there was some time that that we had to take to with the education process to get him comfortable. Plus, in addition to that, this individual was very analytical. So everything that we were going through, he would take time, absorb, analyze, come back with more questions. And one of the great things is there was no pressure. There was no pressure. We put no pressure on the individual. We let them take their time. We answered their questions as they came up. And the level of trust and appreciation that we built with this client was unbelievable. It was a pretty, as I mentioned, a pretty lengthy education process, but it was something that was absolutely needed to get them comfortable. And then once we got past that, it was all about partnering with their financial advisor, letting the individual know that once they found that home and got that accepted purchase agreement, that's when we would start to roll, to start to move more and more on our side. And that's ultimately what happened. I mean, I want to say this individual ended up putting offers in on 7 or 8 different homes, finally found literally the perfect one, the perfect townhome, for him, right down the street from friends, end unit. It was phenomenal at a great price. And during this whole time, we didn't verify his credit. I mean, we verified the credit score, but not the credit, not the assets, any of that, because we knew that this individual was very, very well qualified. And then once that accepted purchase agreement came in, we partnered with the financial advisor. We let him know what type of distribution and how much needed to be set up from what account, in order to show that he did indeed have the assets and the cash flow to be able to make this purchase. And again, when I say, for me, the type of experience and being part of, helping this individual realize a dream was just absolutely unbelievable. And the appreciation that this individual showed was just incredible. I mean, I would just beam, because it was just such a great experience getting this individual into this, into this townhouse, and just, again, helping him realize that dream.
The really cool thing about this was we did actually verify assets. We didn't keep up on verifying of assets. So it was about a 9-month to 12-month process that he was going through. We knew that he was very well qualified. We knew he was the client that was going to be, taking care of what he needed to take care of. He had a large nest egg, and he didn't need to have any income coming in because he could live off of those assets, which in the home loan world doesn't necessarily equate to a good qualifying position, if that makes sense. So when we really broke it apart, we're like, we know we can get this done. We know we can do it this way, and really verified a few things with the financial advisor along the way to ensure, hey, what's the timing look like on if we do this? Can we set this up? And just really got the buy-in from all the parties so that we knew that at the end of the day, we didn't know what that distribution amount was going to be, but we knew that there was plenty of assets there to fulfill on that distribution amount for a long period of time if needed.
Yep. Yeah, absolutely. It was great. Again, great experience. So, with that in mind, Sarah, do we have any questions that have come in from those attendants?
Randy, this just go back to one more step on here. So this is another gentleman that he had a house that had to be sold in Minnesota that was free and clear. So as part of that was getting him back in touch with his financial advisor to best determine how to impact his retirement long term with that as well, correct?
Yeah, absolutely.
Yeah. So instead of paying cash for the new home or paying it off in full, do you keep a mortgage and keep your assets working for you? Which was ultimately, I think, what him and his financial advisor decided to do.
Yeah, it is what they ultimately decided to do. Yeah, that's a great point. Because again, there was that question about whether I should pay cash or whether I should take out a mortgage, and ultimately working with his financial advisor, they decided to pay cash, take out a mortgage, and utilize or leverage the assets from the sale of his of the home that he owned free and clear for other purposes.
So now back to Sarah. Sorry about that, Randy.
No, that's good. No, I'm glad you brought that up. Thank you.
Oh, thank you for welcoming me back. Education, it's like the cornerstone value here at Kevnick Mortgage. And so sharing information, sharing how helping have people's dreams come true, right? Like, that home ownership. So wonderful. So thank you for inviting me back. Now, we do have some questions here, but I am going to go ahead and put the reminder up. This is a great time for those of you that are tuning in. We've got some people watching the live stream here. Hello, tuning in from Minnesota. We've got a couple folks here from frigid Minnesota. Hello. Thank you for tuning in. We do have a Facebook question that has come in. And the Facebook question is, if I work from home and want to buy a home in another state from where my company is located, is that considered a second home? Very great question. Who would like to kick us off on that?
That is actually a great question. I'd love to take on. It can actually, so we've got a couple of these scenarios actually going right now. We've got a couple that's moving from Washington State to Florida, and the husband's going to be staying behind. Ultimately, at some point, he'll be joining his wife in Florida, but we are actually going to be approaching that as a primary residence in that circumstance, because that is where she's going to be living. Little known fact that you can actually, husband can have a primary residence in one state and wife can have a primary residence in another state, and it can work that way. You can also approach it still as a second home as well, depending on where you're going to keep your residency. So both ways could apply. Randy?
Yeah, you said exactly how I was going to say it. So I really have nothing additional to add to that.
Love that question.
Yes, great question. And actually, that was something new for me too. There's always new things to learn. So thank you for that question. We do have a question that's come in from YouTube. And the question is I have the assets available. Am I better off paying cash for my retirement home? Who'd like to answer this question?
I'll take that and let Kevin chime in.
All right.
Yeah, so it's interesting. It's something that we just touched upon. So it really depends on your goals and your objectives. It may or may not be in your best interest to pay cash. Um, as we've done for a lot of clients in partnership with their financial advisor, we've run multiple scenarios where we show what the impact is or the effect is on their assets by taking out a mortgage versus depleting more assets to pay the home off in full with cash. And it's really a decision that is made between the financial advisor and the client. But we certainly, we certainly feel we add value in being able to run those scenarios to show people what the difference is in taking out a mortgage, investing the rest, or doing something else with the rest, or paying it off in cash. Kevin, anything to add to that?
Yeah, there's a couple of other things that I like to add is, it really depends upon people's financial position as well. If they don't have a financial advisor, we do run into a lot of people that, hey, my ultimate goal going into retirement is to have my house paid off. And there's no right or wrong. We have seen scenarios, and it's not to put fear or anything like that, but we have seen scenarios, however, where one of the spouses loses a job or becomes ill or something like that, and they've now don't have access into the money that's been put in their home because they can't qualify for a mortgage or for a second mortgage or for pulling that money back out. So it's just something to consider when you're making that decision. If you've got plenty of other assets to fall back on, I don't think it's necessarily the worst idea. But if you do have a financial advisor, great conversation to have with them. If you don't have a financial advisor and are looking to do so, it might just be good to get a second opinion or a third opinion.
All right, great information and good things to think about as you're preparing for what you need in retirement, whether you're getting to retirement or in retirement, right? So, excellent information. So, we have another question that has come in here, and the question is when is a good time to engage with a mortgage professional? Great question. So, who would like to answer that for us?
Go ahead, Randy.
All right. I'll take it. It's similar to other sessions that we've done. It's yesterday. I mean, clearly the sooner the better. Whether you're 5 years out, whether you're looking to execute to a plan that's 6 months to 12 months out, there's no better time than now to reach out to help start that planning process, just to make sure that again that you're fully educated and that you know what the options are and can choose the best option for yourself and for your family.
The other thing is just being with having a regular conversation. It might be 3 years down the line or 4 years down the line before you do something, but things are always changing. There's always shifts in the market. Is there better programs? Is there increases in loan limits? What ranges are you looking at? So it's good to keep up on things that might impact your ultimate decision. And the information we talked about a year ago might be 90% relevant, but there might be 10% change or whatever that might be. So, engaging in those conversations periodically throughout the years until you ultimately make that decision, and even afterwards, is a great idea.
Again, excellent information. So thank you for answering that question. And thank you, everyone, for submitting some questions. We'll leave the comments open here if you want to submit more questions. And so what we're going to do now is let's move into kind of some final thoughts here as we kind of start to wrap up the program here tonight. And so what I'll do is hand it over to you, Randy, to kind of talk about some final thoughts here as we start to wrap up. But again, make sure to get your questions in. We will answer all questions even after the broadcast. But also, reach out to us as well. So we're happy to answer any questions there. So I'll go ahead and hand this over to Randy.
All right. Thank you, Sarah. So it's been really interesting having the opportunity to work on pulling this together. One of the things that I told Kevin and I told Sarah is that prior to becoming a loan officer, I really didn't have the level of appreciation as to the level of thought and the detail that goes into the planning for these types of scenarios. And taking that one step further, it's just been an absolutely incredible experience for me to be able to assist people to execute on a plan that maybe started 5 years ago, or a dream that started 20 years ago, or even started 2 years ago. Just to help them be able to execute to that has just been an absolute amazing experience for me. So I appreciate the opportunity and look forward to many more. Kevin?
Yeah, I know that I go right along with those same lines. I feel very blessed to be able to do what we do and have impact in people's lives. The greatest thing about our jobs is it's not about us. It's really about you as the customer, getting the information you need, and really helping to, help you achieve your dreams. We're here to serve you as your mortgage expert, as a resource for these types of situations, for challenges that come up, for primary home purchase, whatever it is. It's nice to have somebody in your corner. If you've got somebody, you're blessed. If you don't, we would love to talk to you. We're excited to have September 16th coming up. We're going to share part 2 of this series. We're going to go into a little bit more depth as well, where we can discuss how we helped some other clients navigate both the pre and post retirement strategies, going along with asset preservation, cash flow and stuff along those lines, right sizing, downsizing, whatever it might be. So we're looking forward to seeing you guys then. If there's any questions in the meantime, Randy's available. Myself is available. Kelly, Miguel, or Nikki on the team are always here to help as well. So.
Yes, and you'll mark your calendars because we will be back on February 16th. We'll be back at 5 p.m. Central Standard Time for our next Ask the Mortgage Guide. So that is going to be a great time to come back with all of us here. So make sure to mark your calendars on that. And I'm just going to bring up here our thank you slide here. We want to thank you so much for joining us. This recording will be available shortly on our Facebook and YouTube channel. Make sure to subscribe so that you'll get the notices for the next time that we're live. We will also make this available on our new Ask the Mortgage Guides podcast. And I will post the link to that in the comments here, but we'll also post that on social media. So Kevin, Randy, thank you so much. It's been great to be here with you this evening. We get nicely done. Jennifer, thank you for tuning in. And thank you so much. And that concludes our program for the night. So thank you all for tuning in. And until next time, we're looking forward to positively change your home loan experience. Have a great evening, everyone. Thank you.
Night, everyone. Thank you.